Greetings, everyone, and welcome to the Royce Report, where we provide detailed information on how to grow and expand your company and how to have your business operate more effectively and efficiently. I'm Todd Smith, and if you have not already done so, please hit subscribe, hit the bell as well, and you will be notified each and every time a new video is posted. Hopefully, you've had an opportunity to review the videos I've posted over the last 8 to 10 weeks on how to effectively grow your company, where we covered such items as the formula for success, a business plan, how to observe your competition, and how to be a better communicator, just to name a few. Now your business is starting to take off and you're gaining some real traction, and you need to add some fuel or funding to take your business to the next level. So where do you turn and where do you go? One such option is an SBA loan. So what is an SBA loan? An SBA loan is a loan that is provided by an intermediary lender that is partially guaranteed by the SBA. Now, an intermediary lender could be a bank, a non-bank lender, or a community development corporation authorized by the SBA that operates under their parameters and their guidelines. And the Small Business Administration is a cabinet-level agency that operates within the federal government to support small businesses. Now, as the name says, the SBA is a loan, even though it is partially guaranteed. The reason it's important and it's guaranteed is because in the economy, a little under 50% of all employees, I believe it's around 48%, are employed by small businesses. And the guarantee reduces the risk to the lender and provides capital to small businesses that may not have access to capital without these programs. Now, the SBA is not a direct lender other than for one, and that is what we call the EIDL loan, which is the Economic Disaster Injury Loan. Now, many businesses received these during the pandemic. Prior to the pandemic, they were predominantly used in areas that have had major catastrophes due to weather or other situations, such as the fires in California or the floods or the hurricanes or the tornadoes, to assist companies to get up and running faster once again, because they employ a little under 50% of all employees. Over the years, I have packaged and placed countless amount of loans on behalf of my clients around the country. And the three SBA loans that are the ones that are used most frequently are the following. The first is what is called an SBA Microloan. And as the name implies, it is on the smaller end of the lending numbers or the lending parameters or the amount of money that's loaned. The maximum size of a microloan is $50,000. Now, this loan can be used for inventory, raw material, working capital, fixtures, machinery, things of that nature. It cannot be used for real estate. Now we have the SBA 7A loan, which is the most used SBA loan of all three. This is a great loan. It could be used to purchase a business. It can be used for working capital, machinery, and it can be used to purchase real estate. Now, this loan has a maximum loan value of $5 million, or that's the maximum size that a lender can provide under this program. Predominantly, an SBA 7A loan is a variable interest rate loan, though there are some lenders, there aren't too many, but there are some that will provide a fixed rate under this category. Now we have the SBA, what's called the 504 loan. This loan is used for larger asset purchases. Now, the size of this loan from the SBA lender can only be $5 million. That is not the size of the total project. Now, this is a rough outline of how an SBA 504 loan works for larger transactions. I have packaged this type of loan for hotel construction, warehouses, manufacturing facilities where the transactions get upwards of $10 million or more. This is how the loan works. Let's, for example, say that you are going to purchase a building for $10 million. You, the borrower, would have to come up with a 10% capital infusion or down payment of $1 million. Then there is what's called a participating lender or lead lender based upon the verbiage that would supply a first position loan of $5 million. Then you would have a community development corporation provide a second loan of $4 million. This greatly reduces the risk to the bank because their exposure is only what's called a 50 loan to value or 50% loan to value. Now, those are broad outline of how the loans work. There's nuances in all the programs, and obviously there's nuances with every loan. Now, even though the lenders operate under the authority or authorized by the SBA, they can have their own parameters, and some of those parameters could be loan size. Some lenders may not want a loan smaller than $1 million. Some may not want one over $1 million. I know lenders that specialize in loans from, say, $50,000 to $250,000. They also have asset class or categories of businesses they favor or they do not favor based upon their own underwriting criteria. And then there's credit scores. Credit score could be okay for one lender and not okay for another lender. So all lenders are different. The other item that comes along with a SBA loan, that it is personally guaranteed. The federal government kind of feels if they're going to guarantee the loan, the owner of the business should guarantee the loan as well, which simply means that if for some reason your business does not survive or there's a problem, that you personally will reimburse the bank. The lender also likes cross-collateralization when it's available, whether it be another asset, another business, or frequently the home you live in. And that is the same concept. If you are not willing to go the distance yourself, then the question becomes, why should the government as a whole go the distance? Also, with the SBA loans, I share this with all my clients. Remember, the process is temporary. The benefits of the loan are permanent. There is a lot of paperwork involved, and it does take longer than a conventional loan. The benefits definitely outweigh some of the frustration felt along the way. And when I call my clients weeks and months after the loan is closed, they are always glad they have accomplished this. Again, that's a general outline of the SBA loan programs. They're great loans if you understand them and they're used correctly. If you have any questions, please don't hesitate to email me or leave it in the chat. My email address is below. Please remember to hit subscribe, hit the bell as well. And until we meet again, be well, be safe, be happy, be successful, and always prepare to win.